The world is aflame. The thunder of artillery shakes the ground beneath your boots as you stare into the shivering haze over a bombed-out cityscape. Smoke coils into the sky like a serpent of despair, and in the distance an ominous number flashes across the mobile ticker in your hand. Bitcoin, $73,500, up 18% in the last 12 hours? You feel it in your gut. Panic and possibility, fear and promise, all tangled like barbed wire around your heart. When tanks roll and missiles scream, why does capital rush into code? Why does money flood into crypto when civilization seems to fracture at its seams? In these crucible moments when oil refineries burn in Ukraine, when skirmishes ignite on Taiwan's shores, when hyperinflation tears through a South American economy, traditional safe havens groan under the weight of crisis. Gold vaults lock down U.S. Treasury auctions. Struggle to clear yields, and the U.S. dollar, once the unquestioned global reserve, shudders under the strain of endless debt and geopolitical overreach. Meanwhile, a borderless ledger pulses with life. Nodes around the globe validate each block in real time. Liquidity shifts from dusty bank vaults to humming data centers where miners click through hashes like artisans striking digital anvils. Ask yourself, in a world where paper promises can vanish with a single policy pivot, what becomes the refuge of the restless, the fortress of the fearful, the frontier for the bold? Ask yourself, when power centers fracture, what network remains unbreakable? The answer lies not in gold's weight or the dollar's ink, but in mathematics. Bitcoin's supply schedule, imprinted in code and certifiable by every user, cannot be inflated to fund another war. Its issuance rate halves every 4 years, a feature of preordained scarcity that outlives the whims of central bankers. As the old world burns, Bitcoin's algorithm becomes the only unburnable contract in sight. This isn't theoretical. In Gaza, underground bunkers hum with satellite internet and Satoshi's white paper downloaded onto every device. In Kyiv, rebels route financial aid through lightning channels because every second of delay costs lives. In Caracas, mothers trade digital pesos known to collapse under hyperinflation for crypto on peer-to-peer apps. Sheltering their meager savings from overnight currency devaluation, behind every spike in price is a story of broken trust. Central banks once promised stability through interest rate gymnastics and quantitative easing. But every round of QE in 2008, 2020, and now in 2025 has starved savers, inflated asset bubbles, and wrenched the social contract out of balance. While M2 money supply in the US ballooned past $21 trillion, wage growth stagnated and inequality metastasized. The elite feigned optimism as Main Street's purchasing power crumbled. And when the next geopolitical powder keg ignited, whether on the Korean Peninsula or in the Horn of Africa, investors knew to tether their capital to code, not to crowns or currencies. So what drives this exodus into crypto during conflict? First, immediacy. Traditional cross-border transactions can stall for days under sanctions or swift blacklists. Bitcoin. Transfers clear in minutes, irreversibly, without counterparty risk. When a missile severs undersea cables, satellites route payments. When a banking regulator freezes accounts, on-chain custody remains untouchable. That immediacy is not just convenience, it is survival. Second, sovereignty. Governments wield money as a control lever, freezing assets, imposing capital controls, debasing currencies through stealth inflation. Crypto hands the reins back to individuals. Private keys in cold storage become the ultimate assertion of autonomy. In a war zone, that means a civilian can secure enough value in a tiny USB drive to flee at dawn, armed not with weapons, but with economic freedom. Third, liquidity. Amid chaos, liquidity is lifeblood. Crypto markets run 24/7, immune to holiday closures and circuit breakers that cripple traditional exchanges. When traditional markets hit limit downs, whales and raindrop buyers swoop in to capture dislocated prices. In the last conflict-driven spike, over $500 million in Tether moved off exchanges into DeFi protocols within 6 hours, an acceleration of capital movement unseen in any asset class. But beyond the mechanical advantages lies a deeper psychological transformation. In 2025, the narrative of markets has shifted from risk-free rate to code-based trust. Behavioral cycles, once measured by consumer confidence surveys, are now tracked by on-chain analytics. Dormant supply ratios, realized cap bands, exchange net flow metrics. When dormant supply drops below 60%, long-term holders are accumulating, signaling conviction amid uncertainty. When exchange inflows spike above historical averages, panic grips traders, setting the stage for those with the courage and the data to buy when others capitulate. And so you learn to read the heartbeat of the blockchain like a physician reads an EKG. You see the arrhythmias that precede price crashes and the surges that foreshadow relief rallies. You don't chase the parabolic top. You await the anti-seismic tremor at the market's base. Yet mastery demands more than technical acuity, it demands vision. We stand at the edge of a decade where economic power won't just be measured in factories or farmland, but in control over value exchange rails. Those who own the rails, whether permissioned CBDCs or permissionless blockchains, will define the architecture of prosperity. Central banks scramble to pilot digital currencies to stem the crypto tide, weaving KYC directly into the ledger. But even the fastest CBDC requires permission, flagged transactions, and programmable oversight, antithetical to the sovereignty activists' demand. Meanwhile, evidence mounts. Sovereign miners in Iceland tapping geothermal energy. El Salvador's Bitcoin bond to fund renewable projects. Argentina trialing Bitcoin payroll alongside peso disbursements. These early experiments aren't symbolic, they are living laboratories in monetary fortification. And when the next flashpoint erupts, be it in the Taiwan Strait or the Baltics, capital will pivot to the networks proven in the fire. You feel the tension in your chest, the friction between fear and purpose. Now ask yourself, what is your mandate? To preserve purchasing power? To seize generational opportunity? To safeguard autonomy at all costs? Each purpose demands a tailored blueprint. A conservative steward might hold 5 to 10% in BTC, balancing deflationary strength with portfolio resilience. A tactical visionary might allocate 20 to 30%, using cross-margin to amplify. Exposure willing to endure 40% drawdowns as the cost of admission to the new monetary order. But allocation is only the beginning. Execution demands discipline. Set staggered limit orders across volatility bands, denominated in Bitcoin price increments rather than USD. Protect your core with on-chain hedges. Long-dated put spreads on tokenized AVA-repopped assets. Use decentralized insurance protocols to underwrite smart contract risk. And always maintain a fiat liquidity cushion on-chain stablecoins you can deploy within seconds when the next shock lands. Look beyond the price chart to the corridors of power. Monitor GRLing communiques on stablecoin frameworks. SEC dockets on spot Bitcoin ETFs. BSER search on cross-border payment reforms. Each pronouncement is a chess piece. Institutional approval could unlock trillions in pension flows. Hostile regulation could drive regional outflows into friendlier jurisdictions. Stay nimble. Rotate your regional exposures. Rebalance as new corridors open and old ones shutter. And remember the grand narrative. In the collapse of fiat certainty, Bitcoin is not the aberration, it is the antidote. It thrived through the financial crisis, through pandemics, through bank runs and hyperinflations. Its supply schedule, its decentralized consensus, its permissionless architecture have endured when every other store of value has bent or broken. Now as war zones flare across continents and traditional markets tremble, Bitcoin's spike to $73,500 is not a glitch. It is a clarion call. A call to clarity in the midst of chaos. A call to action before the next conflagration. A call that echoes through data centers and bunker shelters alike. In code, we trust. The hour grows late, the world grows darker. But if you can see the patterns beneath the panic, if you can read the algorithms in the flames, you possess the only lifeline left in a. Now as war zones flare across continents and traditional markets tremble, Bitcoin's spike to $73,500 is not a glitch. It is a clarion call. A call to clarity in the midst of chaos. A call to action before the next conflagration. A call that echoes through data centers and bunker shelters alike. In code, we trust. The hour grows late, the world grows darker. But if you can see the patterns beneath the panic, if you can read the algorithms in the flames, you possess the only lifeline left in a burning world. Will you grasp it? Will you transcend fear and master your economic destiny? Or will you watch from the sidelines as history floods into the ledger you refuse to hold? Your answer writes the next block in this unfolding chronicle. And the network never sleeps. The embers of conflict still glow, but already you sense the shape of tomorrow's order being cast in the furnace of today's chaos. Beyond preserving capital, your deeper charge is to amplify resilience to build not just wealth, but a fortress of economic sovereignty impervious to fiat tremors. This demands that you forge new capacities. The capacity to learn faster than markets move, to think in systems rather than snapshots, to act with conviction while others waver in doubt. Imagine your mind as a decentralized network, every node a skill or insight, monetary history, on-chain analytics, geopolitical strategy, behavioral finance. When one node falters, the network reroutes, adapts, self-heals. You become not a passive recipient of economic fate, but an active architect of your own financial destiny. To build that network, prioritize learning by doing. Deploy small capital into nascent protocols that solve real problems, privacy layers, cross-chain bridges, algorithmic stablecoins. Track their progress not by hype, but by metrics that matter: developer activity, on-chain governance participation, real-world usage cases. When you see code commits outpacing token price, you know you've found a mispriced opportunity. When you see partnerships with energy producers, governments, or NGOs, you know that protocol is weaving itself into the fabric of tomorrow's economy. Pair that active experimentation with strategic reflection. Schedule weekly economy retrospectives where you dissect the week's major moves, central bank announcements, on-chain whale clusters, commodity inflection points, conflict escalations. Identify patterns across asset classes. How did Bitcoin respond compared to gold? How did oil futures shift relative to grain prices? Chart these correlations and divergences on your personal dashboard. Over months, you'll see how war in one region presages liquidity migration into another asset. You'll learn to anticipate the curves before they crest. But clarity without courage is vanity. You must steel yourself against the murmurs of regret and the siren song of safety. When Bitcoin draws down 25% in a single day, the crowd recoils. But you, armed with your conviction in the code, your discipline in execution, your vision of a post-fiat world, see it as a discount, a moment of buying power that few will dare seize. That courage is born from purpose. Define yours now. Are you a steward protecting generational wealth? A builder funding the next layer of decentralized infrastructure? A teacher guiding your community out of monetary bondage? That purpose becomes your North Star when volatility looms. Let it guide your sizing decisions, your risk budgets, your willingness to lean into forks, upgrades, and hard reevaluations of your positions. As you stand at this crossroads, remember that every epic shift has its own currency of value. In Rome, it was salt. In the industrial age, coal and steel. In the information age, data. And in this nascent digital sovereignty era, value pulses through trust networks, open protocols, self-executing contracts, permissionless exchanges. Whoever masters the generation, validation, and transport of that trust will wield unprecedented economic power. So invest not just in tokens, but in relationships with developers, thought leaders, on-chain analytics providers, innovative regulators. Share your findings in public forums, contribute to governance discussions, mentor newcomers. Each collaboration strengthens your network, expands your intelligence, and accelerates collective adoption. In the coming decade, social capital will be as valuable as financial capital. The world will never be the same. The next, and perhaps greatest wave of innovation will not come from boardrooms or government labs, but from scattered coders, open-source communities, and bold economic pioneers who refuse to bow to obsolete institutions. They will script entire economies on ledgers visible to all, enforce contracts with cryptography rather than courts, and democratize credit in ways central banks could never imagine. And you, if you walk this path, will look back at today's conflict, scarred landscapes not with sorrow, but with reverence for the moment you decided to transcend fear, master complexity, and co-create a new era of economic possibility. The fires may still burn, the markets may still quake, but within the code lies your sanctuary and your blueprint. As the cameras fade on today's war zone, remember, the most enduring revolutions are not fought with guns or bombs, but with ideas encoded in math, shared by visionaries, and elevated by unbreakable conviction. Seize this moment. Build your network, sharpen your discipline, Cultivate your courage. And when the world finally emerges from the crucible of crisis, you will not merely survive its aftermath, you will have helped forge its foundation. In the ledger of history, your block is waiting to be written. Enter your hash. Feel the tremors of change beneath your feet, the seismic ripples of an economy being reborn under fire. Each dollar printed, each bond auction teetering, each pipeline that bursts under geopolitical strain is another defibrillator shock to the old order. And every time the dollar stumbles, when M2 supply in the United States eclipses $22 trillion, when real yields plunge deeper into negative territory, when the 10-year TIPS rate flirts with -1%, another stream of capital diverts toward the beacon of permissionless money. But this moment demands more than passive observation. It demands creative destruction, the Schumpeterian spark that raises obsolescence and erects the new. Your mission is to wield that spark with precision. You dismantle outdated asset allocations, those portfolios overweight in industrial conglomerates whose revenues depend on stable supply chains, in commercial real estate peopled by shuttered malls, in bonds backed by obligations unsustainable under endless fiscal deficits. You reroute capital into ventures that thrive on volatility, next-generation decentralized exchanges, private smart contract ecosystems, on-chain identity platforms. At the heart of this transformation lies the concept of programmable money. It's not enough to hold Bitcoin as a static store of value. You must engage with its programmable cousins. Imagine yield-bearing stablecoins that automatically rebalance collateral across dozens of DeFi protocols, capturing liquidity incentives without manual intervention. Picture algorithmic reserves that adjust token supply according to demand signals, stabilizing purchasing power in real time without central decree. These are not theoretical constructs, they are live experiments in how money can obey the market rather than politicians. And then there is interoperability, the gravity well pulling every fragmented blockchain toward a single layer of coordination. Cross-chain bridges, atomic swaps, universal liquidity aggregators, each is a tributary feeding into the ocean of composable finance. Investors with foresight will anchor liquidity in these interstitial networks, monetizing the very seams where one protocol bleeds into another. As assets flow across chains, arbitrage pockets open like fissures in the old financial crust, and your role is to navigate them with surgical speed. Yet, even as you deploy capital into these high-velocity corridors, you must anchor yourself in macroeconomic context. The coming halving cycle will cut Bitcoin's issuance rate to 3.125 coins per block, a shock to supply that, all else equal, tends to ignite parabolic rallies within 12 to 18 months. Equally, watch the Fed's balance sheet for signs of Q2 quantitative tightening that drains $50 billion per month from reserves. That flight of liquidity out of the banking system will tighten credit conditions, bid up yields, and propel scarce digital assets toward outsized returns. Remember too the global debt supercycle. Total global debt has swelled to over 350% of GDP, unprecedented levels that cannot endure indefinitely. As rates rise to fight inflation, debt servicing costs will crush public budgets, forcing sovereigns to default or restructure. In those chapters of crisis, Bitcoin will emerge as the ultimate digital collateral, uncensorable, liquid, non-sovereign. Your strategy must include scenario analysis for sovereign debt auctions failing, LIBOR-like benchmarks becoming uninvestable, and credit markets splintering along regional lines. In each, crypto rails will offer an unbroken lifeline. But let's drill into behavioral finance. Narratives drive markets faster than fundamentals. Reuters and Bloomberg will rush to label Bitcoin as irrational or unregulated, but the true narrative is of mathematical integrity versus political privilege. Your role is to accelerate that shift. Leverage social channels, research newsletters, live streams strategically seed the discourse with data. Chart Bitcoin's realized volatility against the VIX. Showcase on-chain. But let's drill into behavioral finance. Narratives drive markets faster than fundamentals. Reuters and Bloomberg will rush to label Bitcoin as irrational or unregulated, but the true narrative is of mathematical integrity versus political privilege. Your role is to accelerate that shift. Leverage social channels, research newsletters, live streams strategically seed the discourse with data. Chart Bitcoin's realized volatility against the VIX. Showcase on-chain adoption metrics alongside slowing GDP growth. Highlight peer-to-peer transaction volume in sanctioned regions where fiat rails have collapsed. When the story tilts toward decentralized monetary truth, capital follows the curve. Meanwhile, participate in the geopolitical realignment that is unfolding around crypto. The BRICS alliance is exploring a gold-backed digital currency. ASEAN states are piloting CBDCs but remain open to private sector innovation. The EU debates MiCA frameworks. Even as Switzerland quietly positions itself as the onshore crypto hub, you must maintain a real-time dashboard of regulatory developments. Track GRH communiques, BIS white papers, FATF guidance updates, SEC filings for spot and futures ETFs. Each regulatory milestone rearranges the playing field, granting advantage to those who can deploy capital across jurisdictions in hours, not weeks. This is where infrastructure investing meets monetary philosophy. Projects building. Regulated on-ramps in Singapore, compliance, first custody solutions in Canada, institutional-grade staking platforms in Germany, all are nodes in the network of trust, bridging legacy finance to the crypto era. Allocate a sliver of your capital to these infrastructure champions. Their growth will mirror the institutional tide that lifts all decentralized assets. Yet no discussion of frontier finance is complete without addressing security, the Achilles heel of every digital pioneer. When billions flow across smart contracts, adversaries probe every line of code for flaws. Your fortress must be layered, hardware wallets as the first wall, multi-sig contracts as the second, time-locked vaults as the third. Engage white hat auditors to continuously stress test your holdings. Participate in bug bounty programs to align incentives with protocol developers. Because the greatest threat to crypto's ascendancy is not regulation, it is a catastrophic exploit that destroys confidence overnight. As you fortify your position, never lose sight of education and dissemination. Hold closed-door seminars for family offices, private wealth managers, and corporate treasurers. Develop simulation models that overlay asset performance under war-driven liquidity shocks. Publish thought pieces that translate your on-chain insights into compelling narratives for mainstream audiences. Encourage skeptical peers to start with a micro allocation, $100, 0.1 BTC, so they can feel the protocol's resilience firsthand. Each convert is a living node reinforcing the network's growth. In the end, your greatest lever is purpose. Do you seek to preserve your legacy? To champion economic freedom for millions? To build a monetary system that cannot be commandeered by bombs or bureaucrats? Each purpose demands its own calibration of risk and reward, but converges on one certainty. We are at the inflection point of monetary history. The collapse of fiat orthodoxy and the rise of digital sovereignty will define this century. As the dust settles on today's battlefields, where Bitcoin soared 18% in 12 hours amid artillery barrages, the question remains, will you watch from the bunker, or will you pioneer the new frontier? Will you cling to the fading guarantees of the old system, or will you elevate yourself to the role of architect in the next great monetary revolution? The network hums across continents, unimpeded by borders and unbowed by conflict. Your decision to participate, to allocate, to build, to teach, and to defend will echo through every block yet to be minted. Stand firm in the furnace of crisis. Let fire temper your resolve, not scorch it. Code your legacy in algorithms. Hash your intentions into the immutable ledger of history, and as long as the world burns, know this: Bitcoin's flame will burn brighter, still illumining the path for those with the courage to follow. Even as the world quakes, know this: the greatest power you can wield is the power of choice. Every dollar you allocate, every protocol you endorse, every strategic hedge you deploy is a vote cast in the referendum of the future. And unlike ballots printed on paper, these votes are mathematically verifiable, permanently inscribed on networks designed to last generations. Rise above the static of fear and doubt. Embrace the code that cannot be eroded by printing presses. Lean into the volatility that others fear, for it is in those oscillations that opportunity hides like gold in a turbulent riverbed. Anchor your plans in discipline. Calibrate position sizes by conviction, not by convenience. Stagger your entries by data signals, not by headlines. Fortify your defenses with multi-layer security, not by hope. Hold fast to your purpose, whether that is safeguarding your family, empowering your community, or forging the tools that enable millions to claim financial freedom. Let that purpose be the lodestar guiding you when markets dizzy and discord reigns. For it is not the absence of conflict that shapes your destiny, but how you move through it. And when the next skirmish erupts, be it bullets on the streets or bulls and bears on the charts, remember that Bitcoin's ascension amid chaos is no anomaly. It is the inevitable manifestation of humanity's quest for a monetary system rooted in trustless consensus rather than coercive decree. It is the crystallization of centuries of economic thought, from the insights of Keynes on liquidity crises, to Hayek's warnings about centralized planning, to Nakamoto's revolutionary synthesis of cryptography and game theory. You stand at the nexus of philosophy and practicality, wielding the combined wisdom of Drucker, Friedman, Sen, Acemoglu, Harari, Kahneman, and the many architects who have pointed the way toward decentralized resilience. Now it is your turn to write the next chapter, to frame narratives, to build institutions, to steward capital with clarity, courage, and conviction. So rise. Deploy your capital as an act of creation, not just preservation. Build protocols as monuments to autonomy. Teach others not with platitudes, but with data, stories, and tangible examples. And above all, maintain the unshakable belief that in the ashes of the old world, a new order awaits one you have the power to help design. The final block is yours to mine. The network awaits your contribution. The future is not something that happens to you, it is something you co-create with every decision you make. And as long as the world burns, remember, it is in fire that steel is forged. Let crisis steel your resolve, sharpen your strategy, and illuminate the path to economic sovereignty. Because when history records this era, it will honor not the fearful spectators but the fearless architects. Will you answer the call? The dawn of a new monetary epoch is breaking, and you can hear its first light humming through the block confirmations. Feel it in the rhythm of the miners' machines, steady, defiant, unstoppable. Feel it in the countless private keys born this morning in cities you've never visited. Each one a silent oath to autonomy. This is not a fringe gamble. It is a global awakening, unfolding in code and compounding in conviction. Yet even as you witness this birth, complexities swirl like an eddy around your feet. Consider the hybrid wars of the future cyber offensives targeting bridge contracts, sanctions aimed at decentralized exchanges, narrative campaigns seeking to brand permissionless innovation as chaos incarnate. Your response must be preemptive intelligence, adversary scanning of dark web chatter, counter-narrative seeding in influential forums, real-time audits of protocol governance votes. Do not wait for the fire to reach you. Be the one who spots the spark, contains it, and uses the knowledge to strengthen the network. Beyond defense lies expansion. The same blockchain rails that carry Bitcoin today will underpin synthetic asset platforms, tomorrow tokenized equities, programmable bonds, on-chain derivatives that settle in milliseconds. When sovereign debt defaults cascade, wiping out banks and brokers, the innovators who built fault-tolerant settlement layers will be the new clearinghouses of value. Your blueprint includes not just accumulation, but participation in governance, staking support behind proposals that harden these systems, delegating votes to vigilant guardians, and funding bounties that reward protocol resilience. Meanwhile, watch the convergence of two revolutions, crypto and AI, as they coalesce into an economic force multiplier. AI-driven trading bots will mine patterns in order books faster than any human can blink. They will execute cross-chain arbitrage with surgical precision. But the same technology can audit smart contracts at scale, detect anomalies in block production, and optimize decentralized identity verification. Align with teams that fuse machine learning with cryptographic rigor, because whichever network masters autonomous adaptation will command the lion's share of global capital flows. The human dimension remains paramount. No protocol succeeds on code alone. It thrives on community, the collective heartbeat that pumps liquidity, ingenuity, and solidarity through every node. Cultivate your corners of that community, mentor newcomers in secure key management, host roundtables on macro crypto linkages, translate complex white papers into accessible narratives for non-technical stakeholders. Each act of stewardship not only multiplies your own understanding but anchors new adopters who will carry the torch when your attention turns to the next frontier. And do not forget the moral imperative. Real economic liberation is not just about personal wealth, it's about extending the promise of self-sovereignty to those trapped by predatory systems. Imagine micro-remittance corridors that bypass exploitative fees, programmable grants that fund grassroots entrepreneurs, decentralized credit cooperatives that underwrite smallholder farmers in emerging markets. When you allocate a portion of your gains to impact-oriented protocols, you catalyze not only financial returns but transformative social change, proof that code can heal societies just as it can rewire monetary order. As the price pulses, remember that value is not static. It is the emergent property of trust, utility, and network effect. The Bitcoin of tomorrow will not be the Bitcoin of today. Watch for upgrades, more efficient consensus algorithms, privacy layers that protect citizen journalists, Layer 2 solutions that bring microtransactions to the Internet of Things. Each iteration is a leap in purpose, a refinement of the social contract between participants. Align yourself with projects whose roadmaps resonate with your vision of a freer, fairer world. At the same time, remain vigilant for mirror world threats, quantum computing research that could someday erode existing cryptographic primitives. Regulatory proposals cloaked in consumer protection rhetoric but designed to centralize control. Cultural backlash from entrenched interests who view decentralized finance as an existential threat. Your arsenal against these threats includes advocacy, educating legislators on the immutable benefits of permissionless money, and research supporting quantum-resistant cryptography so that the breakthroughs of tomorrow don't render today's gains obsolete. The final proof of conviction lies in legacy. What will you leave behind when you step away from the trading desk or the developer screen? Will your heirs inherit a cold, digitized fortune, or will they inherit an active ecosystem you helped cultivate? The greatest gift you can grant the next generation is not a balance sheet. It is a living, breathing network of open-source protocols, transparent governance structures, and a community bound by shared responsibility. Write code that lasts, fund scholarship on digital monetary history. Build institutions, SOARS, foundations, research collectives that will steward this revolution long after today's headlines fade. Now, as your breath forms clouds in the early morning air of this new world, steel yourself for the tasks ahead. Sharpen your analytical frameworks, fortify your security perimeters, embrace multidisciplinary learning, and commit to both personal and communal advancement. You are not an observer of history. You are a co-author. Each trade you execute, each line of code you review, each voice you amplify in the public square becomes a sentence in the chronicle of economic sovereignty. The network's ledger stretches into the horizon, blocks stacking like stepping stones toward an era unbound by the failures of the past. With every confirmation, you move one step further from the collapsing systems that once dictated your fate, and one step closer to a world where value, trust, and freedom are the inheritance of all. Stand firm, build boldly, teach generously, and as the embers of global conflict cool into the foundation of the next economy, know that your resolve will be the alloy that tempers its steel. The path is yours to walk. The network is yours to shape. The future is yours to forge,